It's almost 11 a.m. here in Hong Kong. Welcome to Bloomberg Markets Asia. I'm David Ingles. Let's get to your top stories. Today, France, headed for political instability after a surprise election win for the left-wing coalition, offers no clear path to a governing majority. French bond futures and the euro are down early Asia Monday. Now, stocks across the region are flat to begin this week. That includes Jay Powell's visit to Capitol Hill and also some fresh inflation numbers out of the U.S. A soft jobs report has now markets pricing for 2 Fed cuts this year, starting possibly as early as September. Plus, Narendra Modi is visiting Russia for the first time in 5 years as Moscow deepens its ties with India's rival, China. Again, welcome to the program. Hope you're all well. Lots of stories to get our heads around as we move into the mid part of the morning or the day, depending where you are in the region, of course, as we move into as the Middle East and Europe wake up. And I guess if glance at the euro, gap lower at the open, obviously very early Monday, thin liquidity, and then we're now at about the midpoint of the day between the low point and the close on Friday. A brief look at euro assets, so weaker, if you will, just to make a long story short in the euro. Across other assets affected, if you will, some of the euro crosses. And of course, oat futures, as you can see, are down 0.25%. So based on this, and I think bond futures are also seeing not as much downside to expect, of course, spreads to widen out a little bit further. Equity market-wise, so we have been able to shrug off the early cobwebs, and we're now up on the Euro Stoxx 50 futures, 0.1%. Now, more on the top story, of course, out of Europe today. Here's the leader of one of the parties in the French New Popular Front Alliance who says that the nation's wishes must be respected.
A majority has made a different choice for the country. From now on, the will of the people must be strictly respected. From now on, no subterfuge, arrangement, or combination will be acceptable. The lessons of the vote are irrefutable. The defeat of the President of the Republic and his coalition is clearly confirmed.
Let me bring in my colleague Oliver Crook, joining us out of Paris today. Oliver, what happened to the polls? What happened here? Take us through the outcome.
Yeah, David, I think that's what a lot of people were asking themselves when they saw those numbers drop just last night here in France, when basically what we had been assured was that the far right was going to see this huge surge, that they were going to be the biggest party within parliament. They were potentially going to get an absolute majority, meaning they could rule within France and make legislation. That is absolutely not what happened. They came in third. What came in first was the left coalition that had been sort of thrown together in part with the aim of defeating the far right. But then even Macron, the intensely unpopular Macron, his party came in number 2, despite the fact that a lot of people have been very critical of him, both for throwing the sort of French situation into total uncertainty, but also a very unsavvy political gamble, is what many people said. I wouldn't say it really paid off, but it came out a lot better than people had anticipated. So really sort of a surprise there. And really what people were braced for were people potentially protesting in the streets because the far right had done so well. They deployed 30,000 police officers across France. That is not the story that we are telling today.
No, certainly not. And, you know, take us through the potential events we should be watching. Extremely short term on Monday. You know, the Prime Minister has said he's about to tender his resignation. Apart from that, what else are we tracking? And, yeah, if you could take us through more on that specific issue.
Yeah, so basically he's going to tender his resignation. We expect that coming to the next couple of hours. We have not heard, by the way, from President Emmanuel Macron last night. We will probably hear from him at some point today. What we have heard from are a number of the other political leaders, namely Jean-Luc Mélenchon, the sort of leader of the largest part of the left bloc. And David, this is where things get really interesting, because this sort of left bloc threw itself together with a lot of disparate different political parties. Jean-Luc Mélenchon is the biggest part of it. He is also the most radical. Have a listen to what he had to say moments after the exit polls dropped.
We said it already last, and we reiterate this to the President of the Republic. We refuse to enter into negotiations with his party to make wheelings and dealings, especially having fought relentlessly for 7 years against his policies of social abuse and ecological inaction. The votes of the French people have just confirmed this.
So you hear it there from Jean-Luc Mélenchon. Absolutely no deals with the Macron government. He says he wants to put his sort of program in full as advertised. This is a program that is pretty controversial, particularly for investors. It does involve a lot of spending. But, David, at the end of the day, no one has an absolute majority right now. So what we are probably destined for in France, if they cannot get something together, and it seems pretty difficult to get people from all these sort of different parts of the political spectrum together, is likely gridlock.
Yeah, plus it's also worth mentioning that the team hasn't scored in open play and we're in the semifinals. That's a separate story, Oliver, I forgot. Oliver Crook in Paris for us, getting us up to speed on that. And, of course, Tuesday, of course, a match between France and, I believe, Spain. Okay, our guys at Bloomberg Intelligence have weighed in on these results coming through. So it's a couple of things, but just to effectively make a long story short, what you do have is a market where on price, the CAC index is up 21% from the bottom to the top of this year, down about 6-7% from the top right now. It casts a shadow over the earnings recovery in terms of French equities. Flip the page, please. Other things to watch out for would be the potential impact on things like the business investment and sentiment, consumer spending, and the prospects of these growth-enhancing reforms. Let's bring in, for more on the story, let's bring in our executive editor out of MLive, Mark Cudmore, in Singapore for us. Mark, market negative, question mark?
It's definitely a market negative. The reaction so far has been quite subdued. I expect there to be a little bit more reaction when European cash markets open later. I think we'll see the euro decline further, and we'll see French yields go higher, and we'll generally see European yields go higher, but we'll see the spread between France and Germany widen. The important thing, though, is even though I think we'll see a little bit more reaction later, and I'm surprised by how subdued it's been so far, this is a long-running negative in terms of it's not a short-term story we trade suddenly and then forget about. The problem this election has brought into focus is that France has now got the worst debt profile in Europe, and it's really, really problematic. Now, we're not going to get the situation any better given that the government is likely to be gridlocked. On the slight positive, we're not likely to get the worst-case scenario of suddenly exploding the fiscal side even worse. But this is certainly a long-term negative, and I think the second half of this year we'll see the euro continue to decline. Now remember, that doesn't necessarily mean euro-dollar, because the dollar is the more volatile component of the euro-dollar cross. But euro on crosses is now looking very negative for the second half of this year.
And Mark, just on your point there on yields and that spread between OATs and bunds, do we test, though, the highs that we saw going into, when elections were first called?
I think we do. I'm not sure we do on an immediate basis, but as I said, I think that people are suddenly realizing that France is a negative story, and so I just don't see why there's going to be any particular appetite to kind of buy the dip now in this story. I don't expect suddenly dramatic pricing, but I think that French yields are going to continue to trade kind of negatively over the coming months, as we just don't have any reason to get an optimistic story around France. And I think it's not that it's suddenly dramatically or intensely negative, but it's just there's no positive story to get excited about. Why buy OATs when you can buy other bonds that offer more yields around the world in this moment? This is not a case of Tina. There are alternatives to get yields. There are alternatives with much better debt profiles that offer higher yields, including in many emerging markets, let alone in developed markets.
Yeah, and Mark, this goes into your, the question of the day, which I think you've outlined part of that already, which assets might be under risk here. Just take us to the thinking here of what we're posing here as far as a question.
Yeah, so just which assets have not yet priced in this election? I would say that we've got more pricing in the obvious ones. So I think euro will trade a bit negatively. I think French yields will go higher. I think it's going to be a problem for French stocks. Again, that's probably it's priced there, but the recovery story is not as good. But I think that this is going to be a long-running, continuous, slight negative on French assets. There's a new risk premium that should be priced in, and I just don't see that going away anytime soon.
Mark, just to pivot to China, and where you have the 10-year yield backing up for a fourth day, and arguably the trigger was this morning with the PBOC coming in by adding something else at the end of the trading session in case they do need to step in and increase their presence in these markets. How do you interpret these new moves from the PBOC?
Yeah, they're looking to get more active in the market, and I think some people might overinterpret this as maybe quantitative tightening, but overall, I don't think they're going to be able to fight the trend that is still quite bullish for Chinese bonds. I know that, you've backed up the last couple of days, but the longer-term story here is Chinese yields heading lower, and I think that given the way the state of the economy right now, I don't really see that narrative changing. So this adds a little bit more volatility. The government will get more involved, but I think ultimately, if you see yields back up too much, people will see it as an opportunity to pile into those assets.
Mark, finally on the Fed and following the jobs report, plus other soft data in the U.S. last week. I mean, Powell is on deck to speak, I think, midweek at Capitol Hill. Is the stage set for a dovish turn, or am I overthinking that?
That's what everyone seems to think, is the expectation he will be dovish this week. He's just had the unemployment rate print at 4.1%. He's had those declining wages. It kind of suits him to kind of say, look, we're seeing clear labour market softness. We know that Powell's reaction function is extremely dovish. He rarely misses an opportunity to kind of seize on data which kind of fits his view. So, yeah, I think it's valid to kind of expect him to be dovish. My one worry is the market is pretty much aligned by that, which means that anything that is counter to that narrative is likely to have a bigger reaction in market. So yes, base case is Powell will be dovish, but if he fails to follow through on that dovishness, yields could get a bit of a shock in the US.
Fantastic, as always. Mark Cudmore, our MLive executive editor in Singapore, for us on all the key macro themes to keep an eye out today and, of course, this week. Just ahead here on the show, Prime Minister Modi is headed to Russia to meet Vladimir Putin. We'll discuss what both leaders hope to achieve, as well as India's greatest rival, China, moves closer to Moscow. That's coming up. This is Bloomberg. Welcome back for a closer look at markets. At this point in the Monday session, Avril Hong joins us out of Singapore. Avril, what are you looking at?
Yeah, we're looking at this risk-off mood across the region. I think it's a trickle through from Europe as we get that election uncertainty, I guess, given how the initial projections show this victory for the left, yet no one party able to have a strong majority. And I think that seems to be the underlying concern. Somehow in the Asia-Pacific, it is mostly risk-off as well, except if you're looking at what you're seeing in Japan and perhaps in Taiwan. TSMC, of course, is a bit of an outlier today, given the upgrade that it got from Morgan Stanley on its price target. But take a look at what we're seeing in Chinese equities. As today, we also got the PBOC in some ways adding an additional layer of uncertainty, right? With that temporary repos. Already it's controlling the currency market. Now the bond market. Something's got to give. And I think this point has been brought up quite a few times by our colleagues at the MLive team earlier today. So equities, no surprises there why potentially it's coming under pressure. But this bond market selling continues. We're seeing the yield on the 10-year moving by almost 2 basis points. Let's flip the board and take a look at what we're seeing in terms of Fed pricing, because this is also another driver potentially for markets, right? After the U.S. jobs report, we showed that slowing in hiring, but the uptick in the jobless numbers and the swaps market increasingly pricing in a move in September and 2 full cuts by the end of the year. So this is the setup coming into the Asia session today.
Yeah, maybe September. Avril, stick around, of course. We'll have more, of course, on the markets right now. In fact, let's bring in Lorraine Tan, our guest this hour, Director of Asia Equity Research at Morningstar. And, of course, Avril will be joining us, too, as well. Lorraine, good morning, and thanks for joining. Why don't we start on the Fed? I mean, I think it's been about 12 months now since the last hike, which effectively means we've been waiting for the first cut for 12 months now. What do you think the first cut might signal for markets? Is it a good or a bad thing when we get to that point?
Yeah, I think it's going to be largely, I think it's largely anticipated. So whether it'll have as much impact as we hope is maybe not. But I think it's a sign going forward that finally Having said that, the initial reaction may be muted. I think it's still positive for markets because basically means that, the risk of a deeper slowdown should be avoided. And I think that generally that should be positive for equities.
Actually, is the Fed cut come perhaps September, based on what the swaps market is pricing in, a foregone conclusion, given how, if you take a look at Trump gaining momentum, there's this idea that that's going to be inflationary. Will the Fed be able to then act?
Yeah, I mean, we're not sure whether it'll be in September or towards the end of the year, but we do feel that there is room, there's going to be flexibility for a rate cut, especially if the signs of the slowing economy are there. As you know, unemployment tends to be somewhat of a lagging, and inflation somewhat of a lagging indicator. So we do think that at the end of the day, the rates are pointed down. They may not, obviously not going to come down to levels that, perhaps that we had seen pre-pandemic, but at the end of the day, it still should be in a downward trend, and definitely off the highs. So basically, we do feel that things should normalize in terms of the interest rates towards what would be a long-term average, which would be around 2.25%.
And Lorraine, just to pick up on one of your points there, a slowing U.S. economy, and we can debate how slow it gets, by the way. Which among the markets that you cover in the region here, or sectors specifically, might be most exposed there to a slowdown in America?
Yeah, so we're looking for the U.S. GDP growth to slow to below 2% in the next 12 months. So what that means is, exporters, manufacturers that are sensitive to the consumer trends in the U.S. would probably be more impacted. So we are a little bit wary, therefore, of primarily export-oriented businesses. We are probably favoring at this stage, because of geopolitics as well, undervalued companies that are more domestically, more domestic, particularly those in China, would be probably one of our preferred picks. The other sectors that we like would basically be some of the dividend plays that have lagged because of the interest rates.
You mentioned China domestic-oriented sectors, but we've been hearing about this recovery. It just keeps getting delayed. How is that going to play out in earnings, perhaps?
Yes, we keep pushing that back, unfortunately. I think this coming quarter, with the mid-year June quarter results coming out over the next couple of months, that's going to add some volatility to the stock market beyond the geopolitics and all the election news that we're getting at the moment. So one thing to watch out for is that it can be disappointing because consumption, particularly in China, is still very slow. We have the prospects of obviously a slowing U.S. consumer as well. So we do see the risk of some disappointment in guidance going forward from this upcoming reporting season. So therefore, we're a little bit guarded, I suppose, in some of our stock ideas as well. So we do think that, the kitchen sink in terms of policy should be thrown in China gradually. And we do think that ultimately that consumption trend should start to improve. Now, a lot of it is based on sentiment around real estate, which we think will only start to bottom probably in 2025 in terms of the pricing. So having said that, so we do think once that stabilizes, we should start to see the confidence come back in China.
Yeah, and Lorraine, just to borrow your analogy of the kitchen sink, I mean, there seems to be, when investors are throwing out, the bathwater with a baby, there seems to be a baby there worth saving. And I'm wondering whether the good stock stories that are listed in China are simply being held hostage by this risk premium that's being applied on the entire market. I guess my question there is, would there be non-China listed China proxies that you think might be a better way to engage with the China story?
Yes, certainly. I mean, one of the segments that we like a lot are some of the laggards in Japan, which are essentially the factory automation names like Fanuc, Harmonic Drives. These are companies that sell a lot in China in terms of the manufacturing segment there. If that starts to stabilize and improve, we should see the order book start to improve for these companies. So these stocks have been a bit of a laggard in the Japan equity rise. So we do favor some of those.
Lorraine, just want to get your thoughts on what we're seeing on the AI space as well. I mean, that rally seems to be very narrow. What's your sense of whether it broadens out, especially after we got NVIDIA getting a rare downgrade sometime last week, right?
Yeah, so if you look at what's going on in the U.S. market, most of the gains can be explained by one single stock, NVIDIA. So it's, we haven't seen as much, obviously, much AI plays elsewhere else. And, the semiconductor industry is obviously a proxy to that. For example, TSMC has done very well. We do like the chip industry still because we feel that the upcycle in terms of, the demand is still in play. And this is for the broad market, we expect the smartphone, replacement cycle to kick off at the end of this year, for example. So we still like some of the laggards there, and that would include names like Global Wafers and Murata and Samsung Electronics. I shouldn't leave that one out as well.
Yeah, so Lorraine, a final question. I'm just looking at your presentation here. The outlook for Q3. So we've talked about some. What other things do you think we should be paying attention to? What else is in here that we haven't touched on?
Yeah, so I would definitely look at some of the more dividends. We've seen the utilities run up recently. We'd probably expect to see some of the other dividend plays go up. That includes the REITs. Singapore REITs might be a group that's worth looking at for the next 12 months. That's one sector. China domestic, as I mentioned, we like the Baijiu names that have come down, pulled back recently as well.
Lorraine, fantastic. Thank you so much, Lorraine Tan there out of Morningstar on their outlook for the second half of the year. Right, plenty more ahead, plus a market wrap of what's taking place so far. There's a big move in the chip space. Maybe that's a clue of what's coming up. We're just headed into the lunch break onshore in Shanghai and Shenzhen. You're looking at the live pictures, of course, of Lujiazui, just outside I think the shot is out of our offices there at the IFC in the financial district. You're looking at, of course, the Orient Pearl TV Tower, or what's the Chinese? Dongfang Mingzhu. There we go. The CSI 300, 0.4% to the downside. We are, of course, coming off the 7th weekly drop, which, if you string that together, is the longest weekly losing streak since about 2012. Weaknesses can come through. We're down about 7% from the peak. We've erased pretty much the gains that we've seen throughout the rally, so we're effectively back to square one there year to date. The other story, though, is really in the bond markets, where we are seeing a backup in yields. We were up as much as 2.5 basis points in the 10-year yield, but that being said, of course, still some upside coming through there on the Chinese 10-year yield. For what else we're tracking, plus, of course, the big story out of Europe and how markets are reacting. Avril Hong, of course, is in Singapore. Avril, what are markets in Europe doing at this point?
Yeah, I think that's continuation from the initial shock of what we got from the projections of the left victory, and the euro is on the back foot. We're likely to see further pressure on the currency. Already we're seeing that versus the franc and the pound. We're likely to see those spreads widen as well. And this is against the backdrop of the left. You know, the initial projections show that victory, and that seems to be raising the concerns about how we could see the hit to business investments, consumer spending. That's also causing the hopes to dwindle about growth-enhancing reforms. But if you flip the board, I also wanted to talk you through what some of these strategists have been saying in terms of equities and, you know, some of the earnings projections, because in spite of perhaps the initial concerns related to a hung parliament, markets could then go on to warm to the idea, because no one party is going to get that majority. And it looks like even then the left might not be able to push through with some of its agenda. So this is what we're seeing from the likes of Krishna Guha of Evercore, that, past the initial stage, eventually we might see a bit more optimism coming through for French equities, at least. Let's flip the board, because as we talk about European election and political uncertainty, something we're facing in the US as well. And and Biden really getting more pressure to drop out of the race. We are seeing, though, that the Treasury market, I think, is more concerned with the Fed's path. This week, we're going to hear from the likes of Powell, speaking on Capitol Hill. If he reinforces that deflationary narrative, then, we could see that reaction in the Treasuries market. Certainly, that could be the case because we've gotten all this U.S. data recently that's just adding to concerns about the American economy, including on the jobs market, David.
Okay, Avril, thank you so much there for an update. Breaking news coming through as Avril was just taking us through the market gyrations right now. So, we've been talking about this potential deal for a couple of days now. So we now have this deal valuing Skydance at $4.7 billion. We're looking at, Paramount stockholders, well, the B class, you will be getting 15 a pop. A will be getting 23 in cash and stock. And we're looking at a potential investment here taking us close to about $5 billion. So the value, based on the current pricing, is at, to be more specific, $4.75 billion US dollars. There we go. Okay, that's the latest as far as that's concerned. Certainly a stock to watch going into later today. Paramount B holders will be eventually owning 30% of the new iteration of Paramount there at the end of it. Okay. Let's back to the earlier point that Avril was just talking about there, who's going to be on the ballot, right? So President Biden remains defiant despite growing pressure to quit the presidential race. He's touted his global credentials. On Friday, in this exclusive interview with ABC News anchor George Stephanopoulos, have a listen.
I'm the guy that put NATO together, the future. No one thought I could expand it. I'm the guy that shut Putin down. No one thought could happen. Who's going to be able to hold NATO together like me? If the Lord Almighty came down and said, Joe, get out of the race, I'll get out of the race. The Lord Almighty's not coming down.
And let's bring in our managing editor for breaking news for South Asia. Derek Wallbank is with us in Singapore. Derek, he's sticking to his guns.
He is, David. Joe Biden has a very busy schedule coming up. He's got the NATO summit that's going to be happening in Washington. He's got packed campaign travel to a lot of swing states. And all of this is a sign from a president who says very vocally he has no intention of going anywhere. Now, the reason that we're talking about this at all is because of that debate performance, raising a lot of questions, including a lot among Democratic allies, about whether Joe Biden was the best person to beat Donald Trump, whether he has the vim and vigor to be able to go and prosecute the case. I want to read you, David. There have been 11 polls that have been done, national polls, since the end of that debate, right? Entirely conducted within there, tracked by Real Clear Politics. 10 of those polls, I'm looking at them right now, 10 of them have Donald Trump ahead. One of them has a tie. In fact, the best surveys that Joe Biden has gotten in recent days came out of a Bloomberg Morning Consult poll that showed him ahead in Michigan and Wisconsin, while other polls showed him down. But if you take a look at all of the swing states that we polled in that survey, if you took all of those results together, then Donald Trump would be your next president. So it's not even with the best case scenario polling that Joe Biden's seeing right now, he's still trailing.
Yeah, so for the Dems, then, is it a question of, is it Biden or is it someone else?
Well, so this is the thing, David, is right now you're looking at a scenario where time is growing thin, right? Democrats have to make a decision up, down, or sideways sometime this month, you would expect, because they have to be able to vote for who the nominee is. Now, Joe Biden has an ironclad lead among delegates, so he has this nomination unless he decides he does not have this nomination. If he does not, the presumptive person is Kamala Harris for a lot of different reasons related to legalities of ballot access to the existing hundreds of millions of dollars raised already for the re-election effort. So if not Biden, probably Harris. The other thing I'm watching this week, David, is that Donald Trump has tried to keep what for him is a little bit of a quieter bar. Yes, he's still posting on Truth Social, and yes, he's still doing all of that, but it has been a little bit more of a restrained Trump. Sometime this week, you would think we might see a vice presidential announcement. Why would I say say possibly this week, because the Republican convention is starting quite soon in Milwaukee, and you would expect Trump to have a vice president walking into his convention. So at some point, Donald Trump will inevitably put himself back into the news cycle. So we'll watch that. But the big thing on Biden is Democrats and Republicans returning to Washington this week. A lot of members of Congress are going to get together starting tomorrow in person, and you will imagine that on the Democratic side, at least, there will be one topic looming over all of the rest, and that's Joe Biden and whether or not he should continue as the Democratic presidential nominee.
Yeah, and Derek, just very quickly, you mentioned the window is closing here. There's a very narrow time frame. Is there a deadline, a soft deadline? Is there a date that they need to decide by?
The deadline I look at is August 7. That has been mentioned as the Ohio deadline. So that's the kind of one that I have in my head, although Democrats had planned to have a vote later this month before their convention to ratify Biden. So that's kind of the timeline that we're talking here. It is measured, David, in weeks, not months, weeks.
There we go. Derek Wallbank in Singapore for us. More on the breaking news earlier on. So the announcement that Skydance will merge with Paramount all-stock transaction. More details coming through on who's going to be at the head. So David Ellison will become the chairman and CEO of Paramount. Jeff Shell will be the president of Paramount, and the deal is seen closing the first half of next year. It was a unanimous vote to approve the merger with Skydance. A vote from the special committee to look at the details of the specific deal on the table. And we're looking at a transaction that values Skydance at $4.7 billion US. Right. Let's have a look at now the other story we're tracking here. So Samsung Electronics and the strike or the labor action that's taking place right now. So we now have a number attached to that based on the union. Shares are trading effectively flat, right at 0.5%. Let's bring in Belle, who's been covering the story for us. She's here with us in our studio. So, yeah, it was a slightly bigger strike in terms of the number of people involved?
Yeah, that's right. Well, the union was saying that they were expecting around 5,000 people to turn out, but we've just been hearing in the last hour or so that actually more than 6,500 people have been protesting outside of the company's chip-making facility. So it's more significant. This union that's organising the demonstration, it's the biggest at the company. It counts around 25% of the entire company as members. And certainly it is a step up in the demonstrations we've had so far, because we did have a one-day strike back in early June. This one today is the start of what could be lasting for 3 days, given that the union and its negotiations with the company over pay have broken down. They haven't been able to reach a resolution there yet.
Will it be disruptive to production?
That's really one of the big questions. At this stage, it seems like, given sort of the high level of automation and given that this was flagged for several weeks in advance, perhaps not. That said, the union is saying that, yes, this is going to impact chip production, and also the union's definitely indicating they could go further from here. This is just 3 days, but they have said that they're open to an all-out general strike. And then, of course, that could be more disruptive. It's a very critical part, though, that this is affecting the chip-making facilities, given, as we were discussing in the last hour, that there's so much focus at Samsung now, with a new head of its chip division, by the way. Yeah. But they are very much focused on trying to catch up in that HBM space, in particular high-bandwidth memory chips. Samsung is a real laggard here to SK Hynix, and they're really trying to beef up that division, and especially solicit companies like NVIDIA, for instance, to be one of their key customers.
The timing is far from ideal. So, well, talk to us about the timing, and also, is the company prepared to meet the demands? Where are we in negotiations?
Yeah, well, the timing, as you said, it's especially kind of interesting because we just had that 15-fold rise in profit last week, and it does indicate that we could be seeing the worst of the chip slump behind us. So that said, I guess it sort of puts a little bit more pressure on Samsung to try and meet these worker demands, because it does seem like we're starting to see a turnaround in demand for chips. They're able to command higher prices, and perhaps they do need to do more to meet workers. Certainly Samsung is aware of this, because last week it was being reported by local media that essentially Samsung was open or was giving out first half bonuses for 2024, and so these are capped at 75% of monthly salary. 75% of monthly salary, it does actually depend on which part of the chip division that you're working within. Some are actually getting a lot less than that, around 35, 37% of monthly salary for a bonus bonus instead. The bonus is really important because it makes up a really significant proportion of Samsung take-home pay overall, and this has really been flagged as one of the key points, especially because the way the company calculates the bonus seems to be quite opaque and quite apart from what other companies are doing in the tech space.
Belle, thank you so much. Annabelle there with the latest on the Samsung strike. Just ahead here on shows, we'll be joined by O.P. Jindal Global University professor Srirata Datta joins us to discuss the implications here of the Monday's trip. Narendra Modi is headed to Russia. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching India Focus. Just looking at markets, of course, they're just coming online this Monday and nothing much to talk about at this point in time. It's fairly reflective of the general direction across markets across the region. Of course, the big story out of India today, or perhaps even tomorrow, is this two-day visit. Prime Minister Narendra Modi is headed to Russia. He's arriving later on Monday. The trip is meant to shore up relations at a time when Moscow has actually deepened its ties with India's rival in the region, China. Of course, if you remember, Vladimir Putin was has met Chinese President Xi Jinping twice in the last 2 months or so. A lot of moving parts. Let's talk about what's at stake here and get perspective from Professor Srirata Datta from the Jindal School of International Affairs at O.P. Jindal Global University. Professor, thank you so much for joining us. Your broad expectations for these upcoming meetings.
It's a traditional historical bilateral relationship where, as you know, defense relation has always been the predominant factor between the two of us. There are many other issues. Of course, educational culture we don't tend to focus on, but that's something that's been ongoing, sustainable over the decades. But the new element in the bilateral is the energy trade, which we've seen, which has taken off during the hostility of Russia-Ukraine. And how does one sustain the bilateral trade, which has now hit 63 billion, which is unprecedented? Of course, largely deficit not working in India's favor. But importantly, the two countries don't really have a very strong financial framework in place. So that's something that I guess they'll be examining there. There's talk about how someday maybe an investment agreement, which is emerging out of this particular meeting. But I would actually think that over the years, we've seen that over 80% of our military hardware used to be from Russia. Now, I think presently it's about 60%. Our imports have come down to, according to the latest CIPRI records, is about 36%. So there has been that India is also, its basket is coming in from different, other than the Russia friendship. So that's something I think for Russia also, and I would actually look at it in a larger strategic framework here, that it's kind of re-emphasizing India's multi-alignment that it wants to emphasize. It's reaching out to every global player for sure. And Russia right now, of course, as we know, in the face of Western criticism, I think this would be a very feel-good for Russia to have Indian partnership. And, this is Prime Minister Modi's first visit post his coming back for a third time. So it's also a statement, and I know these meetings have all been decided long ago, but I'm just saying the timing. There's a NATO meeting which is simultaneously going on. So in all of the international, changing scenarios, I think it's a bit of, I hesitant to use the word hefting, but I would think India and Russia at this point of time is, I think, reinforcing their friendship and partnership.
Right, and on those two aspects on trade, because that's really where the rubber meets the road here. On energy imports, do you expect that, despite the imbalance, to your point, do you expect that to continue? Purchases of Russian oil, number one, and on the other, in terms of defense imports and the supplies coming out of Russia, do you expect India to continue to broaden and diversify its sources for its defense needs?
India has been diversifying its sources, as I just mentioned, but I think the important element between India and Russia is that, as you know, India has launched this, Make in India or the Atmanirbhar program, and Russia has partnered that very strongly and robustly, which is not something that is lost on India, and it works in India's favor. So while I do think and imagine that India is likely to again, look out for other partnership in the defense aspect. But it also has a very core, and I think we are now discussing the kind of, military technologies and all of the maintenance issues, which Russia has been extremely forthcoming with India. India will keep on with that, but diversification is bound to happen, and we've seen that. Also, the Make in India program is something that India is extremely strong about and wants to take that forward. But I think it's a partnership, and it's impossible to think that India will go all with Russia completely on any particular. That doesn't happen in today's world anymore. But it's a reinstatement of bilateral strength and ties. The bonds, I think, are extremely close. And I think there was a kind of a statement by our Prime Minister maybe in the last meeting. And that really sums up that, it's a historical tie and which is going to be there. It's not something, and I think it's this particular summit meeting is going to be a reinforcement of what we're going to see in the decade ahead. It's a really reinforcement of that. And as I said, it's a multi-level. While we do focus more on the defense, there are many other aspects which are also part of the bilateral ties, which we'll see coming up in this particular summit meeting.
Right, and I'm cognizant to your point, because this is a multi-aspect conversation, right? And it's difficult to draw one and one and then what it means for number two, for example. But I need to ask about how close Russia and China have become and how that affects incentives on the India side of things, if at all.
I think it's not lost on Russia that India is concerned about the growing ties that Russia and China seems to be having, as you just mentioned initially, the kind of visits that's taking place. But at the same time, given the fact that in this particular, where Russia does feel that it's been led down by some of its partners, India's show of strength and of support here would also convey something, and I'm sure Prime Minister Modi is likely to raise that. I think it's a subject which Prime Minister Modi is not going to, let it go. He will certainly, but I guess we are also confident about the fact that our India-Russian partnership is strong and is likely to weather storms. But even between very strong friends and partners, there are points of disagreement. And I think China is one of that. And India's concerns are certainly going to be on the table, clearly. I mean, the way we know the two premiers, I think they don't mince their, thoughts. So I'm absolutely sure that most of these issues which are of concern will be laid out straight on the table. And but I guess each player has to do what they have to do. And India's, trying to keep a strategic autonomy everywhere. It's showing, asserting itself in every regional and international global space, as we can see. And we don't expect anything different here, really. But I, at the same time, reiterate that I think Indian and Russian friendship is something very strong, and it's not going to change because of a third player or some other untoward, situation that may emerge. But both of them are equally cognizant of each other's concerns and interests, and I think that's the, key takeaway between the two of them.
Professor Datta, we appreciate your time this Monday. Let's talk more next time, of course, and let's see what we can unpack following the story. Subrata Datta there from the OP Jindal Global University. Very quickly, of course, as we were having a conversation, markets in India are just up and running, and just very quickly on your screens, flat open as far as the benchmark goes. Nifty 100 ever so slightly. It stands out, though, because of the color. But apart from that, really nothing there. Maybe incremental downside as far as the banks are concerned, 0.4% on the Nifty Banks Index. Speaking of visits, this might have caught your eye, at least on social media over the weekend. Here's a look at, I never thought I was going to say these things in the same sentence, Justin Bieber performing in India. It's a pre-wedding celebration, of course, for Reliance billionaire Mukesh Ambani's youngest son, Anant. You have global corporate titans are expected to attend the wedding coming up at the end of this week, and certainly a series of posts on Bieber's Instagram shows that the singer arriving in India, meeting with the Ambanis, and of course some of these clips from the performance there on the ground. All right, big week ahead, plenty more ahead. This is Bloomberg. Now to the top geopolitical stories that we're following. Of course, over in Iran, of course, big weekend there too. So the country has elected a reformist president keen on restarting talks with the U.S. Over a landmark nuclear deal. Masoud Pezeshkian beat his hardline rival by almost 3 million votes in a runoff. Now the turnout was just under 50%, one of the lowest ever recorded for a presidential vote. Now the challenges ahead for them, of course, include the handling of Iran's conflict with Israel. Now, speaking of, protesters rallied in Israel on Sunday, marking 9 months since the war in Gaza started. Now, they're calling for Prime Minister Benjamin Netanyahu to step down and for the ceasefire to bring back hostages still held by Hamas. Now, truce talks advanced last week after reports that Hamas had broadly agreed to a U.S. proposed ceasefire plan. Right, just going into, of course, the mid part of the session here, so that means it's about almost 6 in the morning over in Paris, and of course you're looking at the Eiffel Tower. There's certainly the big story there over the weekend. Well, arguably there are two things, right? There are the elections and the Euros. We'll talk more about the Euros in a moment there. So we're now close to session highs on the common currency. We gap lower in the early goings of Asia. Haven't quite restored all the way back to the close, if you will, on Friday. All that being said, when you look at some of the things like European stock futures are now higher at 1/10%. More subdued reaction, although when you get cash markets opening up, I'd keep an eye on what that spread looks like in the opening minutes between, of course, where we are in oats and also Bund. On the other story, perhaps more importantly, the match between France and Spain is just over 24 hours from now. It's interesting how France got this far without scoring a goal in open play. Amazing what you can do with absolutely nothing. Anyway, that's it from us here on Bloomberg Markets Asia. Horizons Middle East and Africa is just ahead.